Once again, welcome everyone. Thank you for joining us for today's webinar. I am Divya from Relativity Management Solutions India Private Limited. I would like to introduce today's presenter, Mr. Akash. He is a successful young entrepreneur, speaker, innovator, and payroll expert who helps business leaders. He is the director at Relativity and he is well known as financial specialist for 13 years now. He is also a frequent guest at events hosted by NHRD, NIPM, TI chapters, IAHR related to human resources, finance, taxation, shared services, and entrepreneurship. He has conducted more than 250 sessions offline and online, as well as Relativity's regular webinars every month. He is the host of Relativity Knowledge Series 2, a young YouTube channel to help HR professionals be better, and the lead author of our Relativity's blog. It's time to start our webinar, and let's start, and over to you, sir.
Hi, morning. Sorry for the quick technical challenge. Thank you very much, Divya, for the quick introduction, and welcome all of you who have taken your time out from your busy schedules and who have decided to participate in today's crowdsourced webinar. So, we've been running this monthly webinar for quite some time. And from the last 2 months, we have decided to crowdsource the webinar, which means we've decided to crowdsource the topics that we want, that you would like to hear from experts like us in the areas of payroll, accounting, taxation, or compliance. So that's why we say it's completely run by the audience, and I'm just the articulating person on the webinar today. So once again, with that introduction, good morning to each and every one of you. I see somebody is unable to hear. Am I clear? Are you guys able to hear me? If you can chat, yes. Okay, wonderful. Thank you. For those who are unable to hear, why don't you just exit and come in once again? Maybe that will help. And I also would like to convey our sincere wishes to our participants on LinkedIn live stream, on YouTube live stream, and no, I don't even know where and all it is live streaming. Thanks to my team out there. So to all of you who are on LinkedIn or who are on YouTube, many morning wishes to you all. So with that, let's not lose any time, and we have exactly 1 hour. So let's jump right in. Today we are going to discuss 2 topics. One is the topic of ESOPs and RSUs. And the other one is a few updates in the payroll and compliance space. So what I'm going to do is, instead of taking the ESOPs and RSUs first, let me take the item number 2 first, and then we'll come back to ESOPs and RSUs, because item number 2 is very, very important. So before I move on to item number 2, what I wanted to know from all of you is, how many of you belong to the HR domain and how many of you belong to the finance domain? If you can just quickly put up chat. If you belong to HR, just put up HR. If you belong to finance, just put up finance. So what I can do is, appropriately, I can articulate more use cases depending on the majority of the people who are there. So I see a lot of people in HR for now. Okay. There are quite a few in finance as well. Wonderful. Okay. So HR, a lot of HR folks. That's so nice. HR is one, not only HR, but generally HR is such an important function for an organization, and you guys make a big difference day in and day out in the lives of the employees for whom you serve. So that's a kudos to all of you. So let's jump first to the updates, and then we'll come to one. So what I wanted to know from all of you is, are you aware of the current PF wage ceiling limit? Are you aware of the current PF wage ceiling limit? Again, use the chat. This is not a typical webinar where you come and you just listen and you go. There is going to be a lot of interaction. So what is it? Yes, you know. So what is it? 15,000. Okay, 15. A lot of 15 responses. A few 21 responses. Okay, it is 15. So absolutely, all of you who said 15, you're very right. The current PF wage ceiling limit is 15,000 rupees, which means we can limit our provident fund contributions to this 15,000, and it also means a lot of other things like excluded employee limit is 15,000 for people to be a member of the EPS. If they are going to earn more than 15,000, they cannot be a member of EPS involuntarily, and all of that is going to be a part and parcel of this wage limit. So the big news is that this wage limit may increase to 21,000 rupees. Now, increasing this wage limit has a lot of procedural requirements, and what I understand is half of those procedural requirements are already completed, and there is a lot of seriousness among the folks at the Provident Fund department. We call the Labor Ministry as well as the Provident Fund department, who are serious in increasing the PF wage ceiling limit to 21,000, making it on par with ESIC. We already know that ESIC is 21, so this limit is also required to be increased. Now, the last time it was increased was from 6,500 to 15,000, and I think that happened sometime in 2014 or 2013 during those times. I'm not very sure of the year. But then it's what they feel is that with the increasing income levels, it is necessary for us to increase from 15,000 to 21,000. Now, what I'm not saying is that it is going to be implemented the next month or the month after that or the month after that. There is no time limit for implementation now, but we are getting very strong signals that it will be implemented in the near future. It's not going to be very far away. So what is going to be the impact? What may happen if PF wage ceiling limit is increased? Please use that. In that case, will there be change in the 12% contribution pooling? Hi, morning. No, we won't have a change in the 12% contribution. So what will be the impact? I'm happy to receive. Employer PF contribution will change, absolutely. Take home will be impacted because employer will deduct more provident fund from the employee, as well as the employee's contribution is also going to increase, right? That is also going to happen. What else? This is very obvious, but what else is going to happen? Something in detail. If you guys can think and tell me what else is going to happen. There are actually a lot of things that are going to happen. So what else is the additional thing that we should expect is something that we should think of. What else? You can just put the chat, and so that we can discuss and we can see. Okay, lesser take home, gratuity, pension impact, gratuity burden will increase. Actually, really, is this connected to gratuity? Because this is the PF wage ceiling limit. It has nothing to do with gratuity. Tax savings, yes, employees will be able to save more in ATC, absolutely. Pension impact will be there, yes. So more of the funds of what is being deducted will get diverted to the employee's pension scheme, and this will have more money in the employee's pension scheme, and their pension will also increase over, whenever employees are going to retire. Yes, gratuity, that this particular item has no impact on gratuity. So that's something that we should remember. Increase employers' contribution. Absolutely. More member will get added to EPF. Wonderful, Usha Santanam. That's a very, very important item, because we have, these excluded employees whose limit is 15,000 currently. So now when the limit increases to 21,000, all of those who are between 15 to 21 will now have to start mandatorily contributing to Provident Fund. So more members will get added. Absolutely right. Priyanka Subramani says insurance coverage in EPF. Yes, so there is this EDLI, right? The Employees Direct Linked Insurance, which is now currently mapped to 15,000 rupees, will also increase to 21,000, and hence there will be higher insurance coverage to the employees. Very good. Take home, less take home, absolutely right. Complete CTC will increase. Yes, we can absolutely see that. And my team has given me a list of people who are frequent participants. So I would like to recognize them: Ajay Kothari, Shruti Shinde, Priyanka, Puvili, Shilpa, Amruta, Usha, Amal, Raj, and Neela. It's wonderful to see you again today, and I hope you have an awesome time like how you have been having in our previous webinars. Tax impact it will be indirect. It won't be direct, but indirect. Yes. More employees will get covered. Common monthly return for ESIC and PF. We still don't know how that is going to be integrated. We'll have to wait for the labor, rules to be announced. EDLI shall also be increased. Yes. So you guys have nailed it. So in summary, what will happen is employers' PF liability will increase. This is if you are limiting it to 15,000. If your organization is not limiting it to 15,000, if you're going to have just 12% of the basic, then it's there is not going to be any impact. But if you're limiting it to the wage ceiling limit, which is 15,000, and hence you are deducting only 1,800, you are contributing and deducting only 1,800, that will have to increase to 2520. That is 12% of 21,000. So employers' PF liability will increase. So roughly you can see about 520 plus 200, 720 rupees per employee is going to increase, which means, let's say if your organization has 50 employees, approximately 35,000 rupees will be the impact per month in your statutory dues. Your statutory dues will be increased by 35,000 rupees approximately. If your organization has 100 employees, then the impact will be about 70,000 rupees, right? So this is something that you may want to do mathematics. It may be introduced in the next 3 months. It may take 6 months, or it may take even a year. We don't know when this is going to be introduced, but there are very strong, there is very strong signals that it will become 21,000 in the near future. Employees' PF deduction will increase from 1,800 to 2,520, which means the additional 720 rupees will have to be reduced from their take home as well. So what happens if you have a CTC based compensation structure? So that's a question. What happens when there is a CTC based compensation structure? That is right, 8,640 rupees per year increase in one employee. Navnath is absolutely right. So the question is, what happens if you have a CTC based compensation structure, and what happens if you have a gross based compensation structure? What I mean by CTC versus gross based compensation structure is that when you work with your employee and give him an offer, you're going to say the total compensation cost to the company, the total compensation is going to be, let's say, for example, 10 lakhs, right? And whatever are those statutory contributions will be managed within this 10 lakhs, whether it is employees recovery or whether it is employer's liability. It will all be managed within this 10 lakhs itself. So in a CTC based compensation structure, you keep the maximum of 10 lakh standard. And what happens is that impact is felt by the employee. Whereas, in earlier times, about, 8 or 10 years ago, we significantly had compensation based, gross based compensation, which means I will calculate the gross. This is what I'm promising to you on the offer letter. And whatever are the retirals and the benefits, that whatever they are as and how they change, it is the employer's liability. So what do you think? What is it that you use? Is it CTC based or is it gross based compensation? Please use the chat and let us know. And if there are any specific questions with respect to CTC or compensation, then we can talk about it. Okay, a lot of people have said CTC based. So which means when you're talking about CTC based compensation structure, this higher PF deduction of 720 bucks from the employee's provident fund part is going to be removed from the employee's take home. But what is also going to happen is the employer's liability, right? The 1800 to 2520. So that 720 is also going to be recovered from the employee itself. So that's about 1440 rupees impact to the employee per month. Additionally, so that's something that you may have to keep in mind and probably look at whether it really makes sense to have such a high recovery. Of course, if it's CTC, they just have to accept it. There is nothing much, but then this is what is going to happen. The third thing is there is going to be a corresponding increase in admin charges as well, because currently the admin charges are going to be calculated based on 15,000, but now it will be calculated based on 21,000, right? So there is going to be that proportional increase in the admin charges also. Guys, there are people on LinkedIn and YouTube live streaming who are also watching. Thank you very much for joining. Please, you can comment, and actually that comments will be translated back here to me on the Zoom chat. So please feel free to comment, not a problem at all. And hello to all of you there. Next, as all of you have rightly said, the Provident Fund exempted employees can no longer earn more than 15,000. They need to earn more than 21,000 to be exempted from Provident Fund, which means, let's say if you have employees who are earning 16, 17, 18, or anybody who are above 15,000 and less than 21,000 in that bracket, and they are not contributing to Provident Fund because they have the exempted status, we will have to start contributing them for the Provident Fund once this rule comes into force, until they exceed 21,000. Oh, that's not possible. So they cannot stop contributing once they start. So they will be obviously covered for the rest of their life under the EPFO. More number of employees will be covered under EPS, as you rightly know, and proportionate contribution towards pension would also increase. So, people who are concerned about their retirement, who are concerned about how they're going to get that money back and all of that, for them, it's obviously a good news, but at the cost of today's, retirement funds. Okay, so this obviously is one very important, update that we wanted to give you. We do not, let me clarify once again, we do not have a time limit of when this 21,000 is going to happen, but the signals are very, very strong, and it's just going to be not more than a year, if you ask me. How many of you are in Bangalore as employers? How many of you are in Bangalore as employers? Because for them there is a specific update that I have to share. So if there are not many, then I would rather skip and get back to our initial thing. Okay, Bangalore. Okay. So for you guys who are in Bangalore, let me take up. Um, yes, can you? I hope you are able to see the screen. I'm sharing a specific PDF. Sorry. It's a joint declaration under 26 of 6. Right now, this Bangalore Central has already started mandating submission of this form. You know, the whole world, or India per se, we are talking so much about e-governance and e-everything, but yet this form is still supposed to be submitted offline. And what I understand is that about a few weeks ago, I think about 2 weeks ago, Bangalore Central Regional Office had called for a meeting of employers, and they have already informed the employers that if this form is not available on records, the employees' transfer or withdrawal or loan applications will not be processed. Right. So there are two activities that Bangalore employers have to do. One, you guys have to do this for all of your existing employees. Two, you guys have to do this for all new joinees moving forward as well. So if you look at this declaration form, it talks about excluded employees enrollment. It talks about voluntary contribution on higher wages. It talks about the rate of contribution, and so on and so forth. And there is also this undertaking by the employer that has to be provided. So one of the things that that caught our attention is this administrative charges. So currently, what is the practice is that when so let's say somebody is contributing, somebody's basic is 50,000 example, and 12% of that 50,000 is 6,000 rupees. So the admin charge is calculated on the 50,000 basic, right? That's the value on which the admin charge is calculated, which is 0.5%. Let's say this employee wants, sorry, let's say this employee wants a voluntary provident fund contribution of 4,000 more. So there's statutory provident fund contribution of 6 plus 4,000 more of voluntary provident fund contribution, which makes it to 10,000 rupees as PF being remitted. In that sense, there is this particular sentence which I have highlighted, in which they have also underlined, actually means that we have to pay the admin charge for the wage of 10,000, but not for the wage of 6,000. Right, which means we have to pay admin charges for VPF wages also, which is going to be a difficult situation for employers, because until now, most of the times the business practice has been that we just pay admin charges on the wage, minimum wages, statutory wages that will have. We will definitely share this form. A few of you have requested. Yes, we will definitely do that. But this is something that is being practiced at Bangalore Central, and the other offices are also going to start, following this in Bangalore. I don't know how it is going to be in the rest of the country, but if Bangalore is going to follow it, and and then they are going to make a case out of this, I'm sure this will also follow for the rest of the country. Maybe at that point in time, we may have a system where this could be done through the EPFO portal, the employer's login online itself. Maybe we don't know. So these are the two quite important updates that I thought I should talk before we get into the core topic of ESOPs and RSUs. See, it's already 11, and I have time until 11:30 with time for question answers. So it's not going to be a complete extensive discussion about ESOPs and RSUs, but at least it will enlighten you with the big items. And if you guys are interested in a detailed session, you guys can let us know, and we can organize one detailed session for about 2 or 3 hours. like how we did for salary restructuring, we can do a workshop for ESOPs and RSUs as well. So with that, let me quickly talk about. So why I thought ESOPs and RSUs are a good topic to speak is because you see these kind of articles recently coming up, right? One screenshot is what I can see on your I can show on your screen. MNCs under IT lens over ESOPs allotted to staff in India. So this is not only for MNCs. A lot of Indian companies are also getting scrutinized. A lot of startups are getting scrutinized, and so on and so forth. There is also a lot of scrutiny between companies which don't have their shares listed in India, but they have a privately held company in India, and that their shares are listed elsewhere, like in the US or in UK or in NASDAQ, whatever it may be. So with that sense, I thought, okay, this is a good time to throw some light upon what ESOPs and RSUs are, and how does this whole scheme work on a very high level. Right. So one question to all of you is, how many of you are startups? How many of you are startups? One question. Please use the chat, and you can definitely chat on the chat box. How many of you are startups? It doesn't mean that you have to be a large startup to call yourself a startup, but then when we say startups, we have the DNA of startups, right? Being very nimble, changing the identity frequently to adapt to market demands. Maybe your company is looking for some funding. The initial team is very important. You're also small and probably less than 100 or 100 to 250, whatever, it doesn't matter, but you have the aspirations to become $1 billion company, right? That's what startups are all about. So yeah, quite a lot. Yeah, wonderful. That's good. So I think this will be very, very relevant for you, because for startups, one of the very attractive ways of retaining employees or of attracting high value talent is by issuing ESOPs or RSUs. We are all very thrilled when we hear these stories on YouTube or on or on press releases. Hey, 50 employees of this company became crorepati's, or 100 employees of this company became millionaires, and all of that. So that's something which has been resonating in the Indian startup space for quite some time. This is not a new invention at all. The earliest ESOP that at least I am aware of, which I designed and provided a framework to implement, was 13 years ago. That's the time when I started the Relativity and the whole payroll and compliance business. So since then, we know that ESOPs and RSUs are a little modern stuff, but ESOPs have been in existence for quite some time. So these are the topics that we have to know. We need to know about the grant, vest, and sale. Very important. We need to know about the valuation and documentation. We need to know about perquisite tax and TDS on sale. Then the difference between listed and unlisted shares in terms of ESOPs. I know you guys know the difference, but generally the difference between listed and unlisted shares. But in terms of ESOPs and RSUs, how does it impact? Whether they are listed in Indian stock market or whether they are listed in a foreign stock market also makes a lot of difference. And then there were a couple of interesting questions that came up. Should there be provident fund deduction on ESOPs or RSUs, right? So we let's see. We have about 20-25 minutes. Let's see how we can manage the time. So when we talk about these dates, there are three major dates. One is the grant date. This is the date when the company makes a promise, right? So let's say you have a high performer, or you have you have an employee who is critical to the organization or to the product that you're building or the services that you are providing, and you want to retain that employee, and then the employee is also, doing fairly well. In that case, what do is you make a promise to the employee saying that, on this date, I am making a promise to you that you will be issued X number of shares of the company. It could be 250, it could be 25, or it could be even 25,000. So that is what we call as grant date, right? That is the date when you are making a promise. Usually in terms of a letter, this promise is made. There is some documentary evidence to it, and that letter serves as, the proof that the employee is granted, so that, they can claim whatever they have granted at a future date. Usually this letter or your ESOP scheme documentation will also have the details of when it will vest. So what do we call as vest? Now, when you grant, the whole idea of this ESOP and RSUs is to retain employee, right? Retain talent. That's the whole idea. So when you retain this, when you want to retain talent, also the value of the startup is not significant in the initial stages. It is going to be significant only at certain events. Certain events could be when the startup becomes invested, by a VC, or when somebody else buys the startup. That is when these startups can actually make money. Or probably when these startups go and list on the stock market as an IPO, initial public offering. So you need these people to hang on to these shares, and you need these people also to be a part of the core team until these significant events, and those events are the real events when there is a possibility of making money, or what we call as a windfall gain, right? So those are called as the vest dates, right? And they are usually staggered. So vesting looks something like this. I am granting you today, right, 100 shares, but these will vest like this. Every anniversary moving forward, 20% will vest, right? So 100 shares are granted today. After 365 days, 20 shares will vest, which means the ownership of the shares get transferred from the company to the employee. Only on that date, only on the vesting date, does the employee becomes the owner of the shares. After one more year, that is year 2, another 20 get vested. After year 3, another 20 gets vested. On year 4, another 20 gets vested. And on year 5, another 20 gets vested. So this is how the whole 100 shares get vested. Yes. So that is what is called as the vesting schedule or the vest date. This is also very important for us to know. And then there is obviously the sale. Once the shares are vested, the ownership transfers to the employee, which means the employee becomes the owner of those shares. And depending on certain conditions that are listed or that are documented in the ESOP scheme, the employee can sell the share either for a profit or a loss. Of course, when it is a listed company, it is very easy to sell because it's listed on the stock market and you just go ahead and sell it off. But when it is not listed, then the sale has to be facilitated only via the employer on certain events, right? Otherwise, a privately held company like private limited companies, just somebody cannot just go and sell the shares. It's not possible. So the sale date is when the employee sells these shares for a profit or loss. It could be either. It could be a profit or it could even be a loss. When you want to introduce an ESOP scheme or an RSU, ESOP is employee share option scheme, right? When you want to introduce such a scheme, there are these 3 mandatory steps that we have to take. 1, you draft the rules of how the ESOP and RSU scheme would work. What are the guidelines, how it is going to be valued, etc. Because the objective is for the employee to be there, right? So one of the things that is by default added in a ESOP guideline is if the employee resigns, before the complete vesting of the shares, then all the unvested shares will be clawed back by the company. Many companies even go ahead and say even the shares that are vested will be clawed back by the company. So that is also a possibility. So what are the guidelines? You can adopt the standard market guidelines with some small changes, or you can write a guideline for yourself. uh, all of this has to be published, drafted, published. The board of directors have to approve it, and once the board of directors approve it, then we submit all of these details to the registrar of companies, because for a private limited company, the registrar of companies is the authority. So we submit it to them, we increase our share capital, we increase the number of shares being issued, and those additional number of shares will go into this ESOP scheme, from where it will be, depending on the vest schedule, it will be provided to each employee as per their vest schedule. So this is how generally you set up a ESOP or an RSU scheme. Not very difficult, not very impossible, but there are a lot of steps involved, and it has to be diligently followed. That's the secret of running a startup with a transparent ESOP or RSU scheme. That is very important. Now, once you set it up, what happens, right? Upon grant, upon vest, and upon sale, what during these events, these are the most important events. So upon grant, usually a grant letter is given to the employee as an evidence, and then the employer has to actually inform registrar of companies that, see, we have this ESOP scheme which has X number of shares, and out of these X number of shares, which are the pooled shares, we are taking, let's say, 100 and giving it to Akash. We are taking 100 and giving it to, Naveen. We are taking 100 and giving it to Geeta. We are taking 100 and giving it to Radha. We are taking 100 and giving it to Padmajyoti. All of these are Relativity's key employees. I just happened to mention their names because we did a ESOP scheme a couple of years ago. So it just came up. So we informed the ROC that, see, these people have been granted the shares, because transparency is very important, and it's also the liability, the regulatory requirement. During grant, there is usually no tax event for either the employee or the employer, because it's only a promise. Remember, there is no transfer of shares. There is no transfer of ownership. Just by granting, nobody can do anything. So there is usually no tax event for either the employer or the employee. But then upon vest, we have to intimate the employee that this percentage of their shares have vested. And obviously, this has to be in line with the vesting schedule that we have given in our grant letter. Once you provide the vesting schedule, we cannot go and change it. If you say 20% will vest every year, you cannot go and change 15% to be vesting every year. Once a promise is made, it is an irrevocable promise. So we have to intimate about the vest to the employees. At that point in time, we again have to inform the ROC and issue shares and share certificates to these employees. So for a listed company, what happens is the employees' shares will go and sit in their demat accounts. Or in the trading account which the employer has for the employee. But otherwise, if it is a privately held company, like most of the startups are, it is usually a share certificate that has to be provided. That is the actual transfer of ownership from the company to the employee, from the employer to the employee. There are tax events here. There is a tax event for the employer as well as there is a tax event for the employee. We will look at the tax events in the next slide. And then while selling, right, when the sale happens, as I told you, the sale is still an employee's action. The employee has to take that action to sell whatever shares he owns. But in a privately held company, he cannot do it in isolation. It's not like, there is demand, he can go on BSE or NSE and he can just sell the privately held company shares. Nobody is going to buy them. And that's why they are called as privately held companies. So it has to be facilitated by the employer. And many times when they can sell, is a part of the guideline. We spoke about the guideline, right? Is the part of the guideline when an employee can sell. What are the events? Whether it is going to be an angel funding event, whether it is going to be a VC event, whether it is going to be a round A, a round B, or a round C, or whether it is only going to be IPO, right? Or whether the founders are going to buy the shares back from the employees. So those, when the employees can actually liquidate, is something that is also mentioned in the guidelines. And once the sale is completed, because it is a privately held companies, the employer has a liability to inform the ROC, and then there is no tax event for the employer, obviously, because this is a transaction of the employee, of the individual. There is no tax event for the employer, but there is a tax event for the employee. Now, what kind of tax events are we talking about? As you can see, there are two kinds of tax events. One is the perquisite tax, right? That happens upon vest. So what do I mean by perquisite tax? Perquisite tax means nothing but in lieu of money, you are giving some benefits to the employee. In lieu of money, you are giving some benefit to the employee. So when you are giving this benefit to the employee in lieu of money, it amounts to a perquisite, and hence there will be a perquisite calculation which will be taxed, right? Sometimes the employer, gives it at a discounted price for the employee to buy. In that case, it is the difference of that actual price versus the discounted price which will be charged to perquisite. Some employers don't charge anything to the employee at all. Employees don't buy at a discounted price, but they buy at zero value, right? The shares, the valuation may say that, okay, one share is at $100 or $1,000 or $10,000, whatever it is. But then the employer is actually not taking any money from you. In that case, the whole of that value will be charged towards perquisite, and that is called as the perquisite tax. So this is the tax event for the employer as well as the employee. Employee will bear the tax. Employer will undertake all the reporting. Like, for example, they have to undertake payroll reporting. They have to include that in the TDS filings. They have to include that information in the Form 16. They have to include that information in Form 12BA. All of this has to be undertaken by the employer during their normal course of compliance. Upon sale, so I have been issued share for $100, right? And then let's say the company is going for a funding event, and at that point in time, the value, the per share value of the company is at 5,000 rupees, for example. So there is 100 minus 5,000. 5,000 is my sale price, 100 is my purchase price. It's a purchase because you've actually purchased and you've paid tax on it. So 100 becomes your purchase price. In that case, 4,900 rupees becomes your capital gain, and it will be charged accordingly. If it all happens within 3 years, then the tax rate is different. If it is going to happen after 3 years, then the tax rate is different. If it is a listed company, the tax rate is different. If it is an unlisted company, the tax rate is different. So that is a capital gain event, and this is how the grant, the vest, and the sale payroll items are designed to perform. So you guys are HRs, happy to ask, answer your questions if you have any until now, and that will be something that we all can discuss if you have any specific questions. Before I move on to the next slide, there are 2-3 questions. I will take that. I think there was something about which type of companies ESOPs, RSUs are applicable. So for a proprietorship, so ESOPs and RSUs can only be given in companies where there is a possibility of issuing shares. So only such companies we can give. Proprietorship and partnership, there is no possibility of issuing shares. Only for private limited companies, there is a possibility of issuing shares. It could be private limited company, it could be unlisted public limited company, or it could be even a listed public limited company. For all of these 3 category of companies, ESOPs or RSU schemes can be made available. Wonderful. Hitesh had already answered that. Thank you, Hitesh, for answering that. And what is withholding? Withholding means tax withholding. So, you have TDS, tax deduction at source. That is what I mean by withholding. When, it's the employer's liability to withhold the taxes on behalf of the employee based on the income of the employee. So that is what I call as TDS, tax withholding. So any specific questions that you guys have with respect to all of this? There is a set of questions which Amit Mittal has asked. What is the minimum number of employees required to register for EPF scheme? Is there any minimum number of employees required to register voluntarily for the EPF scheme? So I will definitely take this question. Before that, any question with respect to the ESOP RSU questions, I mean, ESOP and RSU items that we had discussed. Happy to take that. Usha has. What is the maximum percentage of ESOP RSU can be issued to employees? See, there is really no maximum and minimum percentage, right? But typically there is no company would give like 51% of their RSUs, or they wouldn't have 51% allocated towards employees, right? That may not be possible. See, the founders will still continue to hold majority of the company. Sometimes it is not only the founders, but also the additional investment partners who will also hold a majority of the company. So usually ESOP and RSUs, depends on the valuation of the company. It ranges between 3% of the company to what I have seen in my experience, maximum is about 11-12%, not usually not more than that. When we sell, okay, Hitesh, you're a nice guy, man. Thank you for answering that. Anyway, let me also see if there is anything left for me to do. When we sell the share on profit part, do we again need to pay taxes? Yes, we need to, because that will come. It will be on the profit, right? You haven't paid taxes on the 5,000. You have only paid taxes on the purchase price. So between the sale price and the purchase price, there is either a capital gain or a capital loss. So if it is a capital gain, you pay the taxes. If it is a capital loss, you offset this loss with some other gain that you may have. Yes, Arun, if you can, quickly answer one gentleman's question regarding provident fund items. I think it is about 20. What is the minimum number of employees required to register for the EPF scheme? It's actually 19. So 19 and above, we become liable to get registered under EPF. Is there any minimum number of employees required for voluntary register of EPF scheme? I don't think so. Even if you have 3 or 4 employees, you can go ahead and register. What is the process of registering for EPF scheme? Just like how we register for normally, we will have to undertake registration for VPF scheme. We have to get the number, right? You have to initiate the registration.
Yeah, it's more of online.
And you can go ahead. Sorry, go ahead.
It's more of an online process. So we have to get the concern. Only thing, the difference between the voluntary coverage and mandatory coverage is we have to get the declaration from employee who is willing to contribute to PF for voluntary coverage. So that declaration we have to upload it. The rest of the things are same as the mandatory coverage.
Wonderful.
Yeah.
Thank you, Arun, on that. And quickly, before I move on to the next set of questions, some facts about relativity. Many of you are new. We are 13 years and young. We have 153 clients and counting. We handle about 12 lakh transactions a quarter. Our accuracy rates currently are 99.5%, and we are present in 16 cities. A pat on the back, which we usually like to boast, is that we have about half a million Form 16s issued, and that's something that's really, we've been in that core business of issuing Form 16s, digitalizing them, running payroll, advising companies on getting their Form 16s right the first time itself, and then we take great pride in doing that. What we do is in the areas of payroll, taxation, compliance, and accounting. These are our 4 verticals. In payroll, we undertake payroll outsourcing, lodgement, in-premise payroll, or payroll audits as well. With some of the low-hanging services that we do for startups, that many of your startups, is we help with salary restructuring. Now the new labor code is coming. We can help you with all of that. We can help with tax efficient salary structure as well, so that your employees can have lower tax within the ambit of the law. With taxation, we do TDS audits, compliance, and end-to-end management. With compliance, under the compliance side, we completely take care of PF, ESI, PT, Labor Law, Shops and Establishments Act, local labor compliance, you name it, and we do it. So this is generally what we do in terms of compliance, in terms of payroll, in terms of accounting. Connect with us on LinkedIn. You've already seen Divya's post about YouTube, and then we also have a very content-rich blog. So be pleased to look at some of the articles. There is one specific article which we also spoke about last time. It's about PF applicability for interns, which has more than, I think, 35,000 views. So happy to you'll be happy to read what's there. Okay, so back to the questions. Let me do, yes, here it is. So Trisha asks, what kind of compliance do we have to maintain in India in case of ESOP? We issue ESOP from US office and register there. We issue ESOP from US office. Yeah, so so that's also one of the things, right? You have an Indian entity. You have an Indian entity. Your employees belong to this Indian entity, and then you're issuing ESOPs from a US entity, which should be the parent entity of this Indian entity. That's absolutely fine. But even in that case, there is all of those compliances, except for the ROC compliance. Everything else is required to be done, which is in terms of payroll, you'll have to calculate the perquisite tax, you'll have to calculate the vesting schedule. All those documentation that we have to do still has to be done. But there is one thing that you don't have to do, which is comply with the ROC, Register of Company Requirements, because ROC's ambit is only for Indian companies, not for foreign companies. Okay. Okay. If the company withhold the tax at 35.88, is that correct at the time of vesting or purchase? So Ankita, if you are talking about RSUs, then this rate is correct, but that's not at the time of purchase, right? At the time of purchase, if it is an RSU, you definitely don't pay anything at all. So whatever is the slab under which the employee comes, if the employee comes under 35.88%, you have to deduct at that. If the employee comes under 37.5%, effective tax rate of 37.5%, you have to deduct 37.5%. If the employee actually does not come under 35 or 37, but they are more on 31.6%, then you just have to withhold 31.6%. So it's purely based on the effective tax rate that is applicable for that employee after the valuation is undertaken. Yes. Anir Bans asks, what are the criterions wherein employees can opt out of PF? Currently, there are two criteria. One, they should never have been, contributing to PF. That's one criteria. And second, their gross salary should be in excess of 15,000. So then they can become excluded employees. But if they fail any one of these criteria, then they will definitely be liable for PF deduction, and the employer will also be equally liable for PF deduction. So while we are also talking about all this, there is a quick feedback poll that I'm launching. So it's basic questions which helps us be better. So it helps us know what you expect and how we can do better for our upcoming webinars. So please take a couple of seconds and do provide your feedback. The poll has already been launched, and I will anyway continue to work with the questions that I have. Okay, wonderful. Yes, fabulous session. Thank you, Hitesh. That's kind of you. And okay, any other questions I can see? Okay, emails above 15K, they have a choice to select. Anybody above 15K, can we deduct PF without their interest? What? Sorry, Anusha, what does that mean? Can we deduct PF above without their interest? I did not understand. So the answer to Priyanka Subramani is above 15K, and they should never have contributed to PF earlier in their earlier employers. If both of these conditions are met, then the employee has a choice to either continue to be an excluded employee from PF or to start contributing to PF at your organization. So if they choose being an excluded employee, then you don't have to deduct any PF or anything, and then just keep continuing. But if they choose to participate in the PF program, then it's as usual. But for which we need to have explicit consent from the employee that they want to be excluded from the PF scheme. One. Second, now I showed you the form 26 of 6, right? If that is the case, and if your jurisdiction PF office wants that form, then this excluded employee also has to fill up that, which is also important. Yes. So I hope both of your questions are answered, Priyanka and Anusha. Mahesh says thank you. Yes, thank you. Yes. So Arun says you need to collect form 11. So that's correct. That explicit consent comes in the form of form 11 to the employee. Wonderful. Okay, if employee had PF earlier but withdrawn and now rejoining, wish no PF, can we consider as an excluded PF employee? No, I don't think you can consider, because their Aadhaar would already be mapped to a UN, and then that's not possible to consider them as excluded employee. Is that right? Once a PF, always a PF. Like if one employee is in PF past, but now he is not willing to go with PF. That's not possible. Once you are in PF, it's always in PF. Okay, wonderful. So guys, dot on time. I see 54% of people have polled. I request the rest as well, because this definitely helps us be better. This definitely helps us innovate. In fact, the whole idea of crowdsourcing topics itself came as an innovation, as a feedback from such polls. So request you guys to please participate and provide your feedback. It won't take more than 10-15 seconds. And I'm not the only person who's behind. I mean, you obviously see only me, but there are 3-4 people who work to make sure that all of these webinars happen effectively, happen nicely. I'm just the curator, so your feedback will definitely help. Wonderful. So I'm around here for any more questions that you have. And yes, my team is going to email you the recording of this session as well as form 26Q. Somebody also put it on the chat. So any questions, I'm still here and happy to answer. Ajay says, thank you, Akash, and entire relativity thing. Thank you very much, Ajay. Really appreciate it. And see you the next webinar as well. Our webinar schedules are pretty standard. Every month, second Wednesday, or is it the third Wednesday? Divya, can you clarify when is Wednesday? Second Wednesday or third Wednesday? every month. I think it's the second Wednesday. Yes, so that's standard. Every month, second Wednesday is our webinar. Yes, thank you, Parimala. Kind of you. And how pension withdrawal process is hard copy required for employee can apply online also. Okay, so Arun, can you answer Saurabh Chauhan's question? I'm waiting for the next webinar. Me too, Shweta. Me too. Thank you. Yes, administrator, thank you for enlightening. Yes, thank you. Second Wednesday, wonderful. Yes, appreciate all your efforts, Puvili. Very much appreciate you coming, sir. Coming, yeah. Entire team, thanks. It was you. Do you have any channel for it to catch you? Ankita, are you asking about our YouTube channel? Yes, we do have YouTube channel. Or if you want to connect with me, please use LinkedIn chat. I'm available. Yes. Arun, there is one question pending. If you can please respond to that question. How is pension withdrawal process? Saurabh Chauhan's question. Online also we can apply. Okay, so Arun has already said online too we can apply. Yes. Anibaran, thank you. Mr. 11, thank you very much to you too. Gopal, thank you. Usha, as always, thank you. Great. So it's always wonderful interacting with all of you. Thank you very much for each and every one. And you have a wonderful week ahead. You have a wonderful month ahead. Be safe and let's connect again. Bye-bye.